Climate change. Policy protecting homeowners from flood insurance rate hikes. In 2019, the U.S. experienced a very active year of weather and climate disasters. 14 separate billion-dollar disasters. There were 8 severe storms, 3 major inland floods, 2 tropical cyclones, and 1 wildfire event. This marked the 5th consecutive year in which 10 or more separate billion-dollar disaster events have impacted the U.S. 2018 brought to the Carolinas Hurricane Florence, which is considered the wettest tropical system to hit North Carolina, according to the Weather Channel, and some parts received nearly 3 feet of rain. National Weather Service estimates $16.7 billion of damage from Hurricane Florence. 74,000 structures were flooded and 5,000 people were reported rescued from flooding. Nearly 140,000 North Carolinians registered for disaster assistance after the storm. In the wake of this disaster, along with many others, the Federal Emergency Management Agency began the process of reevaluating policy rates for flood insurance through a program called Risk Rating 2.0. Critics of this bill believe this bill would raise insurance premiums too high for their constituents and actually cause many of them to drop their coverage altogether. Estimates show that rates will increase sharply for some 200,000 people, increase moderately for 3.6 million policyholders, and premiums will actually decline for 1.2 policyholders. But the 200,000 that face steep increase are the people that require flood insurance the most, and policy rates hikes can quickly get out of control if there's no protection for the homeowners. Stop Flood Insurance Rate Hikes Act, known as H.R. 7364 IH, category Bills and Statutes, collection Congressional Bills, Congress number 117th Congress, and last action date listed April 1st, 2022. The full title is to permit policyholders under the National Flood Insurance Program to elect to have previous premium rates remain in effect until the administrator of the Federal Emergency Management Agency satisfies certain conditions and for other purposes. This is a bipartisan bill that is meant to protect flood insurance policyholders from steep increases in their premiums. Congressman David Rouzer, NC 07, who is our representative in New Hanover County, is a co-sponsor of this bill and explains there are serious transparency concerns surrounding Risk Rating 2.0, and he was concerned to see FEMA move forward with implementation. He continues to explain families in southeastern North Carolina have seen their flood insurance rates increase from $500 a year to over $4,000 a year for a single home. This bill would allow policyholders to maintain their original premium until FEMA is able to meet certain accountability and transparency requirements. People who oppose this legislation are mostly against it because they want to discourage people from building and developing in or on flood areas, and they believe that these increased insurance rates will help to do that. However, there are many people already residing in these areas, and some of them have been there for years. The answer is not forcing them out of their own land. It is investing in adequate flood protection and investing to adapt regions to be equipped to handle flooding while protecting the land and the homeowners. References